Netflix has been ruthlessly cutting costs in recent days. Netflix subscriber growth has stopped and gone negative. And, at least for the moment, Netflix is no longer a growth company. After reigning for years as the king of streaming, Netflix faces a tough fight to stay on top. It lost 1 million subscribers during the second quarter of 2022. Its stock declined almost 70% so far this year. What does this mean for Netflix? What does this mean for the streaming industry? What does this mean for tech companies? What does this mean for the economy? And what does this mean for the future of the United States? But, before we get into that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. Is Netflix in financial trouble? Well, that depends how you view the future. Even after a disastrous 2022, Netflix is still the largest streaming company in the world. But, losing over 1 million subscribers definitely calls the future of the company into question. Worse, Netflix guided to bigger subscriber losses to come in the second half of 2022. Netflix is not the only tech company so experienced decline in 2022. The Nasdaq has slumped 25% in 2022 as a confluence of factors came into play. Now, though, the market has been falling. The US economy is ravaged by non-stop inflation. The Federal Reserve is aggressively increasing interest rates. Russia's war on Ukraine is also a major factor. The lingering COVID-19 pandemic and related lockdowns in China are also having an impact. Companies that have run into problems in 2022 are being punished severely in the stock market. Netflix has hatched plans to start a low-cost version that is supported by advertisements early in 2023. Netflix could generate as much as $3.6 billion in ad revenue by 2025, and $8.5 billion globally, said Wall Street analyst Justin Nolan in a note to clients. The basic premise here is that Netflix launching an advertising tier is probably a good thing for revenue and earnings, Nolan told Yahoo Finance Live on Wednesday. But competition in the streaming space is intense and getting more so. The streaming industry is highly fragmented with many competitors and no dominant player. Wall Street analysts tend to look beyond the number of subscribers. Streaming platforms have grown more open to exploring various distribution and pricing models in order to diversify audiences and offset shrinking growth, notably through ads, Nolan also noted. Netflix is not alone in its decision to pursue an ad-supported version. Disney Plus has also launched its ad option set to debut on December in its own efforts to roll out an ad-supported tier next year. Netflix announced the hiring of 2 new senior executives last week aimed at pursuing success in the ad-supported streaming market. Netflix is now moving up the launch of its ad-supported service to November 1st in order to get a jump on Disney Plus. A subscription to Netflix ad-supported is expected to range from $7 to $9 per month, according to Bloomberg. Bloomberg has projected that Netflix plans 4 minutes of ads during each hour of content viewing. Netflix investors are now betting that a lower-cost ad-supported version will save the company and bolster the slumping Netflix stock. But not all Wall Street analysts are convinced and have warned investors not to count on advertising to increase their Netflix stock price anytime soon. But, what do you think? Please leave us a comment below. We would love to hear from you. Please hit the like button. Please share this video on social media. Thank you for watching.